All right. Hey, everybody. Welcome. My name is Jesse Randall. I'm the founder and CEO of Sweater. I am your host today. And I guess we, as Sweater, are your host for Founder Saga, where the whole purpose of this is to be able to dig up raw founder stories, understand what it's like to be in the trenches, and really starting from the back of that napkin until they get outside funding and even beyond, right? And look at the stories of what these founders have experienced and really examining how every single path is different and that that's okay. And that the pain we feel along the way is also okay, because it's never easy to build these companies. So today I'm really excited of all the timing we've had on all these interviews. This one is cool because we have David Baskovic with us from Flatfile, and they just announced their Series A raise today of $35 million. May not be a record, but hey, that's like 90th percentile raising right there. So it's awesome. Welcome.
Thank you. I think it's like the top 4 in Denver, so I feel good about it.
Nice. I feel good. Right. I'm gonna go buy like one of those trophies from like a thrift store. I'm gonna put your name on it.
You're like fourth place.
Fourth place. Love it. Well, welcome. I mean, so a little history for those who are listening. David and I met about a year and a half ago when I first moved to Denver, and he was super nice to me and welcomed me here and spent some time together, kind of get to know things and how we could improve Denver. And we've stayed in touch since. So it's exciting to watch you hit these milestones and make the progress.
Thanks. Yeah, it's been a crazy couple of years.
Yeah. Well, let's start off and have you tell everybody what the heck Flatfile is, because I think that if to the untrained eye, maybe there may be some context you can provide to kind of help everybody understand what the heck Flatfile does.
Yeah. Broadly, it's this thing we call data onboarding. But if you've ever sort of built or worked on any sort of B2B software, most B2B software is built as sort of like an empty box. It doesn't matter whether it's a CRM product or a marketing platform. You've got to bring data in order for that box to do the thing, right? If you're going to manage your deals, you got to bring in your customers. And that's a pretty universal problem across almost all SaaS. What I've seen, and I've been doing B2B SaaS now for 15 years, is that this is a problem that doesn't have or didn't have prior to Flatfile a solution. You would either have your customer support team handle it, your customers would email spreadsheets and be like, all right, here's all of our data. And your like really awesome onboarding team would be like, all right, we're going to hand this to an engineer. They're going to write a Python script and like pull the data out and load it into our API. And then we're going to be like, white gloved you in. And if you're doing like
white gloved you in,
I know, right? Great customer experience. And then if you're doing like product-led growth, you clearly can't do that for 1,000 customers. And so then you get these really primitive sort of import features that are like, here's our template, fill out this template, upload this template when you're done. And if you're lucky, 30 minutes later, you're going to get an email that says, sorry, it failed, and here's the reasons why. Or just, sorry, it failed for an ambiguous reason. So
I've had that happen.
Status quo of the problem space.
Yeah.
I was leading engineering at a company called Envoy. My co-founder was leading product. And we were running into this problem yet again. I was just like so frustrated. I was like, why do we have to commit so much of our time and energy and resources now to building this feature out? So I like to say I rage designed the first version of Flatfile. I was like 3 weekends and I went and I was like, what if it was a product? What if I didn't have to go build this myself? So that's sort of the origin story. Long story short, right? It was a problem. Everybody wanted it. And there's a company there.
Yeah. Well, we'll dig into all those minor details.
Yeah. For sure.
So give us an idea of where you're at today. I mean, raising a $35 million Series A is a big deal. Most companies never get anywhere close to that stage, let alone that level of this stage. So, can you give us an idea of like kind of what your reach is like and that any metrics you might feel comfortable sharing?
Yeah. So we started early, right? So we did a 2 million pre-seed sort of out of the gate when we had barely any revenue. We did have a product, so that was great. We had a couple early sort of proof of concept customers. And so we raised that round sort of as early as we could. And then as soon as we hit like sort of early revenue traction, we went and raised a 7.6 million seed, which gave us sort of the ability to start building that scale engine. And so I think that's like, the journey of every SaaS startup is how do you build the machine that can like scale this business to hundreds of millions of revenue. So I think we're like right at that phase where we've got like the first version of the machine. We're sort of through the product market fit experimentation. We're through some of the sort of, top of funnel experimentation. There's still lots for us to solve. We have the early sort of innings of a machine that can scale. And we've reached sort of a point in revenue where now we can sort of, especially in the market environment this year, use that to, further capitalize the company and lean into sort of measuring, experimenting, and scaling up. Our expectation is that we'll be, in the next 18 months, we'll be at 10 plus million in revenue.
Yeah, it's awesome. Very cool. All right, well, let's go back a little bit more. I want to hear more about the actual, frustration moment and what was going on there. I mean, you told us briefly. So, I mean, you're working at a different company. You're obviously managing this a lot. I mean, give us a little bit more detail of like what exactly you were doing, where you were, like all that kind of stuff.
Yeah, you have pretty limited resources at any software company, especially on the build side. You have way more things that you want to build than you ever have people that can build them. And so you're always, backlogged a year on the features you want to build. And so I think it's particularly frustrating for any sort of product leader to realize that you're committing a ton of resources and time to something that isn't a core competitive advantage of your product, right? If you're building a productivity tool, your data import feature isn't the thing that's going to differentiate you, right? It's going to be the productivity platform that you have. And yet we, oftentimes will spend 2-3 months on features like this. And that means that our product is, not benefiting from some of the other things we could be building. And we're doing this because we have to in order to scale. So that was the particularly frustrating part for me, is it just felt like a complete misapplication of resources and time to go and build this feature out. But it was something that absolutely had to happen, especially as you move into enterprise and you start seeing more of these files. So I think, it's for me, I think like inefficiencies are the most frustrating thing. It was also something that I had built a dozen times at different companies, at my own CRM company, at HubSpot. It doesn't matter sort of where, every one of these companies has one of these features. And so I was like, this is the most repetitive thing I've built, yet it takes so much time and energy to get right. So it felt to me like there was a room in the market for this. Or I was like, if I would spend $50,000 a year on something like this right now, there's probably somebody else out there that would. So that was sort of the thesis going in. And so I had a friend who was looking for work, hired him to build it out over like 6 months, and then like stuck it up on Google Ads for I think like $1,000 a month, like targeting a handful of keywords that I searched for.
Yeah.
When I like was looking for this, and that was just great. Like the early pickup was awesome. I think we had like Capital One signed up. It was like one of their PNs signed up like 2 days into this like experiment. We're like, oh wow, didn't expect a large bank to be potentially an early adopter for this. They didn't end up becoming customers at the time, but yeah, we had a great like conversation with them about the feature and what they were looking for. And what we realized is that it's not just like cool CRMs and SaaS. It's basically every software company that has to get data in there. And most companies are now software companies. A bank is a software company, right? A insurance company is a software company. And so you sort of expand your thinking about TAM. And that was one of the things we started doing early, is like, this is not just SaaS, right? This is everybody. All of that, all that indicated like really strong product market fit. But the thing that made me quit my job wasn't any of that, actually. It was after like letting the thing run for 6 months, going and analyzing the data we had collected and realizing we had just observed 20,000 people go through, upload data, label it, correct it, and we got to watch every decision they made. And when you think about like one of the biggest economic challenges of building an AI company, right? It's access to subject matter experts that are going to train models. And we had like gotten free access to 20,000 subject matter experts ready to train us on the long tail of data problems. And that was just mind blowing. That was, one of the biggest narratives I went and raised off of when we went into the pre-seed.
Yeah. So you fit into an interesting category, which is you were solving your own problem, right? Founders don't always fall into that category, right? You're also observing other things or, come up with some random idea. But so within that, I mean, it's interesting. Did you ever feel like, because before you really got those signals from the market per se, you still had to build stuff, right? And you still had some financial outlay in order to do that. So how did you feel? Did you ever doubt yourself on, am I the only one here? Like, how did you get past that? Or did you just always know that this was a bigger problem?
Yeah, I think early stage founders should approach things incredibly pessimistically. I've like made the mistake of being like a dog with a bone before, and wasting a lot of time on ideas that don't scale. So I sort of came at this from a different direction where I was incredibly pessimistic that there was something there early on. Like I thought like there could be, but like it was equally possible for me early on in the idea phase, this could go and become an open source project if there wasn't that right product market fit. And then my goal for the first 6 months was to measure the things that I would like want to know if I was going to commit. Like I had a great job. I don't want to go and commit another few years of my life to an idea that wasn't going to have legs. So yeah, sort of ran through, all the testing on sort of product market fit. How do customers think about this? Will they pay for it? How much does it cost to acquire a customer? What are the unit economics? What's the wedge? What's long-term play? Sort of like all these things that like I really wanted to know before leaning in incredibly hard. And got the opportunity to do that just by letting it sort of be a side project for a little bit.
Hmm. Yeah, that's awesome. So you said side project was 6 months, or was it 6 months to build plus a certain amount of
Yeah,
time?
it was like 6 months to build. So from idea stage through, there's essentially a year. I was like, interesting idea, designed it. Then it took about 6 months to build. The guy wasn't working full time. Again, it was a side project.
Oh, okay.
And then after that, I just let it run for 6 months and sort of people actually put it in their products, right? It's like this random SaaS app. We were like signing up and putting the SDK into their products. So it was really interesting to observe that like it was working and people were willing to pay for it.
Yeah, that's awesome. Um, so I think that it's always interesting to try to like identify the feelings that people have, right? Because at the end of the day, like we're emotional creatures,
Yeah.
and we can be incredibly irrational, especially when it comes to things like what you're doing with your career and that sort of stuff. So, for you, like when it really came down to that decision to go pursue this, what was going through your head? I mean, it sounds like you've made some mistakes before, maybe. So, like, what was going through your head in terms of like where you wanted to go?
Yeah, I think so. Pursuing it was sort of building this really deep understanding of what the market was and what the wedge was, right? So the wedge is, this widget that's going into a software application. But what was the market for us? Like what was a long-term play? And I think that was something we really tried to unpack before we went and raised money. I think you have to, right? You're going and selling a multi-billion dollar outcome. You have to know what that multi-billion dollar outcome is. And so by the time we like built that picture and for us that from day one, it was what I described as the Star Trek translator for data, right? We would learn from sort of all of these user decisions as they imported data in order to automate it. So the sort of goal from day one was to remove the product. We don't want to have a product that people interact with. We want to have a button that
Yeah.
you upload data to, and that's it, right? There's no interaction beyond that, right? So that requires an ability to automate data sort of decisions a lot more extensively than we currently have the technical capability to. So that was the exciting part for me, and that's when I really got excited about solving that problem, but also just solving it at an enterprise scale. As we started doing like enterprise sort of market research, we realized that companies are spending hundreds of millions of dollars a year on something like this. And so there's a path for Flatfile to go from the $10,000 ACV sort of SaaS company all the way through to sort of I love the UI path go to market sort of experience, which is sort of this really effective bottom end of the market, coupled with the ability to have massive multi-million dollar deals with some of the largest enterprises in the world. So I was
Right.
really inspired by that, and just got excited enough to lean in, and I felt like it was a good
Right.
too. I was my
Yeah.
worst critic, and I felt like it was an incredibly good bet.
Yeah. It's hard to be your own worst critic and your best optimist at the same time, right? So it's almost like dual personalities. So did you work with anybody else like outside your own head to help you think through this? Like advisors or other people you were bouncing this off? Like who else was part of this conversation in your head?
Yeah. So as soon as I like made the first mock-ups, I shared them with a bunch of people and I was like, check this out. Like anybody who would look at it, like, what do you think about this idea? And there's a lot of positive feedback. Like my now co-founder was really engaged around that. And what actually started happening is a bunch of different people I had worked with or knew were like, oh man, can I help? Right? Can I help design? Can I help do whatever? And so over the course of that year before we raised money, there were a bunch of people just putting in like a few hours on their weekends. They were, helping build the website out. They were doing, the customer support, et cetera. So, the business is starting to bubble to the surface there, and there's actual people using it. And there are just enough people willing to put in a few hours a week towards that. And I just compensated them with equity, and sort of started building towards a company.
Yeah, that's great. So you don't have a co-founder officially?
I do have a co-founder. Yeah, I
Oh,
co-founded
you
it.
do? Okay.
Yep, he is basically
Okay.
like he left when when I finally like went to him and I was like, hey, like I think there's something here. We both sort of quit our jobs simultaneously, and then went and spent like 6 months essentially like raising money. We sort of quit in January, and we were funded by June. So it was, the first 3 months were sort of prepping and getting all the things in order to raise. And neither of us had ever like raised properly before. Been through the startup experience a bunch of different times, but like doing the VC fundraise, especially this early, was new to us.
Oh, yeah.
So yeah.
Okay.
So yeah, it was a
So was
new
he part of,
experience.
yeah, was he part of the testing phase, or did you come to him after you'd already gone through all that?
He was pretty engaged on that, but I mean, it was definitely sort of started off very much as an experiment, and so like everybody started leaning in a little more. He definitely got much more engaged towards the end of that as the company started emerging there. That was the right time to start getting a little more serious and working together on it.
Yeah,
Yeah.
I like your description of leaning in as you get more evidence, right? I think that that's a good way to think about it. I see so many entrepreneurs, and I've experienced it myself, where you get so emotionally involved from day one in only an idea, and then you get, it makes the ride a little more volatile, because you undoubtedly are going to get punched in the face a bunch of times, especially at the beginning when you're trying to figure stuff out, right? So it's like, if you're treating it like an experiment, and
Yeah.
you step back and you allow those things to come in and out, and it's more like I'm absorbing data and behavior more
Yeah.
so than, oh, this hurts me because I thought that this was a good idea, and oh, it is a good idea, no, this is a stupid idea, like
Right. Yeah.
contradictory information that comes in. So I like that description. I think that that's actually really helpful, that as you get more evidence, you lean in more and more and more until you're on the bike or whatever.
Yeah, and I don't think I don't think there's there's a bit of a switch where you lean in, you're committed to it, but also I one of the biggest things I try to teach my team is that like there's no holy cows, right? There's no idea that you shouldn't throw away if it stops working, right? Like if we try something, so like everything should be iterative, right? So it doesn't matter if you're launching a new product or you're attempting a new marketing play or whatever, like look at it, measure it, see if it like have an opinion on what successful looks like. And if it's successful, great. But if it's not, like be ready to throw it away, right? And I think you got to keep doing that as you build a business. It's not just the early stage.
And that's for every element of the business too, not just building the product. I mean,
Yeah.
it comes to marketing and like where you're digging up customers and how you're putting together the storylines. I mean, everything, right? You end up getting rejected and kicked in the teeth all the time. So were there any particular, if you think back, like any moments of rejection or surprise that maybe were like, is this the right thing to do? Like after you committed and you were in the trenches.
So I think the unknown for me was the fundraising part. I wasn't sure sort of what to expect in that process. I think a lot of first time like fundraising founders go through this experience where they're like, is it taking too long? Am I doing something wrong? So we iterated on our neck after every single meeting. We go to a meeting, and everybody, we got 50 no's before we got even something that was like a lean in. And it was like, people are struggling with the market size. That's the first one that is like really hard to, really build conviction in early on. Like, do I believe this is, not a feature? There's a market here. So we iterated.
I mean, this is a whole new space. I mean, that by itself
That too, right?
is tough to pitch.
Yeah.
Yeah.
And I think it was we didn't. Well, one of the things that I learned is early on, you need to give investors, you need to point them in the right direction to due diligence, because like they will listen to your words to some extent, but then they're going to go and they're going to talk to people they trust and say, hey, is this a problem, right? And one thing we saw early on is that they would go to a SaaS founder and be like, oh, is this a problem? They're like, oh yeah, we built our own thing. We would never pay for that, right? I was just like, so like it's like, oh, okay, that's not helpful. And so we started doing research on portfolios beforehand, and like picking a company in that portfolio we felt like would actually be really good diligence. We would talk to the founders of that company in advance and like sort of pre-sell them on it. And then when we went to that investor, we'd be like, oh, you should talk with so-and-so. We're talking to in your portfolio, we're talking to them. And all of a sudden that diligence would actually start being a little more meaningful. So sort of needing to tie in all the different parts to it. There's also just the good at telling the product story too. It like, you know, like investors are looking for a very different thing. And I'm coming from a product background. I want to tell them about all the features, right? That's not what they're looking for.
Well, so I want to dive in and talk more about this fundraising from a pre-revenue, really kind of pre-product to a degree perspective. Because this is kind of a hot topic, right? I mean, a lot of founders want to go out and raise money before they have some of these elements in place, which if you talk to any investor, they're all going to say, have a product, have revenue, have customers that love you before you talk to me, right? So you really buck the trend on that. And I mean, frankly, in a different conversation, Sweater's doing the same thing for different reasons, you know? So in that experience, let's examine that 6 months, because I think that it's good for everyone to understand how hard it is, right? And kind of how atypical it is, but then also just to hear how you navigated it, because you won't be the last person that successfully does this. So let's talk about some of those elements. So where did you start the fundraising process? I mean, you built the deck, you know, you said you laid some groundwork and then you started raising. So where did you go?
Yeah, the only place we could, right? I think my co-founder and I each had like 2 or 3 like threads we could pull on. We didn't have VCs in our network. Actually, my co-founder did have a couple who were really helpful in providing feedback through the wrong stage. So they like let us dry pitch them and they gave us feedback on it. And then we started trying to get intros. We did some cold outreach to people. We tried to put ourselves in the way of people we know who are looking. So like, you know, either in discussions or conversations where VCs were. We asked every founder we knew for an intro to VCs that felt would be interested in this, and started building those early conversations. And I think it's really interesting, like when you're building your network and you're trying to raise at the same time, you're doing like 2 jobs at once. And so we were trying to get to know VCs, trying to pitch them on the product, and trying to, you know, close capital. Initially we were thinking $1 million, and then it turned into like more than we expected, ultimately. What's interesting about the pre-seed stage is I think it's becoming much more common now. I mean, I just invested in a startup that is pre-revenue, barely product. And they did a round at 30 million post. And I'm just like, what? It's like, it took me 2 rounds to get there. But like, we're in a pretty founder-friendly market right now, where if you're the right founders and it's the right problem, capital is available very early. In fact, there's like new funds emerging called Earth funds that are like pre-idea funds. Or just like loose idea funds, basically just investing in founders to
Hey, we need more of it. I wish that there were more of it. I mean, it kind of harkens back to like angel investing, like in the 2005 to 10 timeframe, right? They would actually move money without anything, right? And it kind of stopped for a while. I think part of that is like blaming software a little bit, right? Because it became so easy to build and launch software. I mean, easy is relative, right? But so much more accessible to build and launch software that they just raised the bar. And they're like, well, you can generate revenue. It's not that hard. So get to 10,000 a month in recurring revenue. And that's my new standard. And then everybody else just got left behind, which was really irritating for about 10 years, you know, like you almost couldn't do it. But the pre-seed is really, it didn't just replace seed. It also went back to where it used to be in many ways.
Oh, interesting. I've never raised back then, so that's interesting to me. But yeah, I mean, things are cyclical in nature. This tends to happen, and we're going to go through a dry in the future, potentially. Although I did have I did say this last night in a clubhouse room, actually, and I was like, I actually don't think it's going to go back, because I think like the reason why capital is becoming more accessible right now is because of the like top of funnel supply of capital, of people who want to sort of access some of the biggest wins that are happening in venture capital. And we now have sort of proven metrics, and it's a good place to invest. And so the number of LPs and the amount of money coming in sort of top of funnel for funds, I think is a lot more accessible than it used to be. And I don't think that part's changing. I think like when you have the right unit economics, like that'll keep playing out until something gets fucked up with the unit economics.
Yeah, I agree with that. I tend to agree. And, you know, Sweater's probably accelerating some of that problem, because we want to open up a whole new category of LPs, basically.
There you go.
I mean, that's our whole purpose. So there we go. So why don't we talk for a second just about like your initial sales, you know, like, so you ran like, and really getting into revenue. So you ran this experiment, you got people wanting to use the product or at least validating what was there. So did you really get into revenue in a meaningful and repeatable way before you raised money, or not really?
Ish. So I think we were, overall like under 15,000 ARR when we raised. So we had a handful of customers paying us a very small amount of money. We had one customer that I think was like a $9,000 ARR deal. So like they held like 70% of our ARR. And they were a big customer. And so we had just closed that prior to fundraising. And so there's like this sort of like leading indicator that people will pay for it. And yeah, I don't think pre-seed investors need that. But I think it was helpful for sure.
Mhm. Yeah. So when you got funded and you're actually going into market, how did you decide to build the sales machine? I mean, did that end up being you? Did you hire outside specialists to do that? Like, how did you guys ramp and go from zero to your first, whatever, 50K?
First year, the problem we wanted to figure out before we figured out sort of sales or pricing was really at scale how much, like what CAC was. I mean, that's like the one of the most important sort of elements in the unit economics of scaling any SaaS company. And so we spent, out of the 2 million, we spent almost 10% of it within 3 months on sort of top of funnel experiments. So we ran different marketing campaigns, different ad campaigns. We wanted to see what like the cost per lead was and sort of what percentages actually converted with, basic onboarding experiences. And that was really helpful to us because what we saw to that was essentially it's going to cost us $2,000 to acquire a customer pretty consistently. And then we took that and we backed into pricing from there. Well, we need to charge our customers more than $2,000 a year. And we should probably build in some buffer for that to get less efficient over time because it's likely to do that. So we started, that's where we started experimenting with pricing a little bit. So we raised in June, then we sort of ran a bunch of these experiments and just tried to scale sort of the number of people using the product without trying to worry about pricing too much. And then going into January, we just deleted our pricing off the website. And it was like, we had a $5 a month plan or something like that. We were just like deleted it all. And it was like, contact us. And we had sales conversations. Eric and I had sales conversations with every single customer for a period of about 6 months. And we realized we could sell this for $10, $20, $30, $40,000 a year per customer. And so sort of going through those experiments allowed us to sort of come out of that and go, all right, now we need to figure out how to make this self-serve again. And then we rolled out self-serve pricing. In there, as soon as we rolled out new pricing, we went from about 100,000 in ARR at that point to 300,000 ARR in a period of about 8 weeks, which, sorry, I got a sneeze here. Which was like something that we shared with investors was the right inflection point to get people excited, right? Like, oh, people are definitely willing to pay for this. Look, like expansions definitely work. People love this product. They're willing to go from paying them, $300 a year to $9,000 a year without blinking. Clearly, they're still underpricing it. Sort of all the things that investors want to see. And so that's when we got a preemptive offer and we did our 7.6 million seed round.
Okay, yeah. Well, and then from there, right, you got good cash in the bank, and you can hire the team to do what you need to do.
Yeah, I mean that was just last March this time, so that was a year ago, and that there's been an incredible year since then, and clearly you got preempted again and did this round, but yeah.
Well, this COVID probably didn't affect your business too much then, or has it? I mean, it's affected every business, but.
Yeah, I think it's affected. I think in some ways negatively, and in some ways positively. I think Flatfile is part of every sort of adoption of technology. Not every yet, but like we're part of adoption of technology. So COVID sort of accelerated a lot of industries adopting more technology. So a lot of our customers were coming to us saying, "Hey, we can't handle the influx of people trying to adopt our ed tech product or whatever it was." And they would use Flatfile to facilitate, schools starting to use software to be able to run their classes in COVID. So I think Flatfile got to sort of be part of that that motion.
Mm-hmm. So if we jump back for a minute and examine like where you ended up raising money from. So I mean, you're located in Colorado. I think a lot of the people that are listening here aren't necessarily in Silicon Valley or New York. Yeah. So being a founder that's outside those core areas, where did you end up going hunting for investors, and where did your investors end up being?
Yeah, we looked at a lot of different places. I think for the type, like if you're going to build $1 billion company, if that's your intent, then I don't mean to throw any other cities under the bus, but the best money you're going to get is going to be in New York and SF. LA a bit, but as soon as you start leaving those hubs, the economics start shifting. And like I've got term sheets from funds that are outside of those, but they're like 1/3 of the competitiveness of the term sheets available from funds in New York or SF. Now that is changing. There are like funds in Denver and Atlanta and sort of other cities are realizing that like they have to compete for deals, and they're shifting to sort of baseline off of a similar sort of set of economics that Silicon Valley funds are. But I don't know. I think it was tough for us. We couldn't get deals we liked outside of those two cities.
So what do you think drives that mentality? I mean, if we just like wax philosophical for a second, I mean, it's the same money, right? So, but it's a different mentality. What do you think the difference in mentality is? What's driving it?
Yeah, I mean, like I think investing is all a risk appetite problem, and I think there's just also like historically markets have been pretty localized, right? Like if you were building a company in Denver, you would go raise in Denver, and therefore sort of just like real estate, right? Like prices are relevant to that market. I think what we're seeing in the last few years is, especially in the VC side, a much more of a globalization of the market. And so this is not even just within the US, right? US funds are investing in Canada and Europe, and they're bringing sort of the same economics we have here there. And so I think we're in the middle of this shift, and it's interesting to see like founders who can sort of access the sort of major networks of funds sort of get to bring that pricing back to cities like Denver. Like Flatfile now has set a new baseline that founders can observe here in Denver and go, wait, can I get that deal? And now sort of funds who are working in this region have to be able to sort of compete for that, or that people might go looking elsewhere.
Yeah, it's a bit of a slow process, right? Because it's like they got to roll out entire funds over the course of 5 years, and before they change their thesis and their parameters.
Yeah.
Slow moving machine. How do you feel like Colorado's doing? You've been here for a while.
There's a couple like emerging funds here that I think are really leaning into. I mean, I think a city can't really scale its sort of startup space until there's a couple of early stage funds. I think Denver has had a little bit of a problem where you would have to have $1 million in revenue before you raise capital from some of the major investors here in Denver. I think we're starting to see now a couple funds emerge that are absolutely willing to bet early. I think that keeps people from leaving, right? Like historically, outside of COVID, right, people would just have moved their office to SF and gone and started there. I have so many friends who left Denver to go do that. And I think having early stage funds here in the city is going to keep and incubate a lot of the companies locally.
Mm-hmm. Yeah, it's crazy. Like if you look at the numbers, I think there's like 27 VCs in Colorado, but they're all like early stage.
The last 2 years, like
yeah, exactly, and they're young, right? They're really young. And then you got a good sized anchor like Foundry, but Foundry moves most of its money to coastal companies anyway, right?
Yeah.
We've only got a handful that have been here locally. Well, I want to give you the last 5 minutes and just kind of hand you the mic and say, if you are standing in front of an auditorium of founders who are either in the trenches or thinking about, I've got a crying child out here, sorry, or thinking about being in the trenches, what would you want to say to them to take them down the path that they have to go?
Yeah, that's an interesting one. I think there's a couple different things there. So I'm going to pick like early stage founders. I think this is the stage I like investing in. So anybody going through this, please talk to me. I'd love to help. But also I think the most important thing is to deeply, truly understand your customer. And if you get there by being your customer, like lucky, but like otherwise find a way to fall in love with the problem. Like it is really like, this is gonna be the hard, one of the questions I got when I first started raising was, why are you ready to throw away a decade of the best years of your life on this problem? I think it's like a really serious question you have to ask yourself. Like, is this really, because if you're a startup founder, you can definitely go get an incredible job somewhere else, right? Like you have the chops to go and lead and make a ton of money. And it's like, are you sure you want to go and like you risk everything and a ton of time and stress and energy on this. Is this the thing that you really love and care about? And so I mean, I fell in love with this problem, but I fell in love with the future of the problem too, and what we could do to sort of change the economics of data. So I think like you can founders who fall in love with a problem can really move mountains very quickly, because your attention and the ability to listen to customers and ability to iterate on your product and move quickly and then like build conviction with investors, I think is incredible. So I'd say like my one piece of advice is just find a way to truly fall in love with the problem, and like everything else sort of starts being a little easier, because this is to your point, you get kicked in the teeth a lot. You got to be ready for that.
That's awesome. Yeah, well, and I love that. I mean, like, be ready to fall in love with it, because I mean, truly, like, people I think will often kind of flippantly say you need to be passionate, which I think is just such a broad, like, over applied, kind of watered down term these days, but I like the way you said it. Like, I mean, you've got to fall in love with this thing that you're doing, because it's hard, and you got to be able to pull yourself through it. I love it.
Yeah.
Well, David, thank you for spending time with us today. And again, congratulations on the recent fundraising. Awesome to see that big milestone, and selfishly glad it's happening in Colorado.
Right.
We want to continue to see more companies make it here. So thank you so much, and good luck.
Absolutely. Well, thanks for having me, man.
Yeah, no problem.
All right. Have a good one.